Good evening and welcome to my end of the week recap here for Apple and return to my video trade plans here. Had a nice little vacation and for Apple I was able to take one trade only. Got in 13 April 167 half calls at 297. Target was the 50 SMA. Didn't expect it to happen in one day, but I'm not going to complain with those kinds of profits. A lot was left on the table because it was a nice move up. Um, for the rest of the time I was on vacation, I did not even really pay attention to Apple. I glanced at it here and there, but did not take any other trades. The S&P was the only other thing that I traded while I was gone. Today, huge amount of selling momentum in Apple. Missed this initial push, missed the dead cat bounce. Finally caught the late day breakdown in some 165 weekly puts here at 28. Now, I did not have, I was not quick enough to put next week's 165 puts on there, which would have yielded some much better gains. So these I did not hold anything overnight. I was in at 28, half out at 43, took some more off here at 36, and the remainder what trailed me out was supposed to be at break even, but it got a little bit of slippage right here on this little pop. So overall, a very good trade there, had a decent amount of size, and worked out very nicely. Now I'm going to go up here to the higher time frame and look at my plan for Monday. Right now, since we're in such a tight range here towards the end of the day on Friday, this is going to be what I'm trading against. Basically a $1 range right here. So whichever way price action breaks above or below, that's going to give me my risk. My reward is going to be the significant levels I have identified on the daily time frame. For calls would be 172.5. If price action breaks above, say 166.5, I would be looking for a move up here to test these moving averages, maybe even fill the gap. Might take a whole day, might take 2 days. It may not even trigger me into a play. On the other hand, excuse me, if price action breaks below the 200 SMA, I will trade 165 puts, stop loss just on the other side, for a move down here to around 156.5. I've identified 156.5 simply because that is the gap fill way down here from this initial support level at 150. If price action does start to come down here, chop around, start bouncing, dead cat bounce, come up, and all the way back down, may test 150. Now it's worth keeping in mind and mentioning that the earnings is here on May 1st. So any options I do take after May 1st is going to have a lot of premium built into them. So I'm still going to take a decent size position, just not as many contracts. So a little bit easier to manage when you have a lower number of contracts, but the price of those options, either calls or puts, is going to be a lot higher than usual. So right now, that's the trade plan I have for Apple. On a glance here at the weekly time frame, because it's worth mentioning here as well. This is almost what can be considered a falling three method. Basically, you have a big sell-off followed by three candles that kind of retrace that sell-off, another big candle that wipes out that whole bounce. Now, price action may start to bounce back up here again, run into this resistance level around 175 and sell off again. Again, I mentioned earnings is in 2 weeks, so there could be a lot of price action that moves before then. Price action may even just chop around until we have earnings as a catalyst. There's really no way to guarantee what is going to happen. But what it does look like is there are a couple of significant levels here on the chart that I'm going to be paying attention to. This would be my trade plan for Monday. If you follow me on YouTube or StockTwits, please come join us over at the Trade Crew chat room. It is free. We call out our plays in real time. You're welcome to join, follow along, lock in some profits. Have a good weekend and good luck.